Hi, this is Indraneel and you are watching Business Bites in our channel The Spotlight, India's first online business news channel. In today's Business Bites, first news we have, Tata Motors is set to buy Italian truck maker Iveco as their second largest acquisition for $4.5 billion. Second news we have, Reliance Consumer Products to acquire Baidyanath Group's premium fruit drink brand Shunya. Third news we have, Mumbai-based NBFC firm LCD Investments to invest 7,500 crore in quick commerce company Zepto. Fourth news we have, Indian electronics contract manufacturers partnering with global companies to get access to the US and Europe. And fifth news we have, Lenskart filed for IPO to raise 2,150 crore in fresh capital, and the company is targeting valuation of 70,000 crore to 75,000 crore. In first news, Tata Motors is set to buy Italian truck maker Iveco as their second largest acquisition for $4.5 billion. Tata Motors to buy Iveco from its principal shareholder, the Agnelli family, for $4.5 billion, and that is making the Tata Group's second largest acquisition after Chorus and the largest ever for the automobile major, while in 2008 Tata Motors bought Jaguar Land Rover for $2.3 billion. In this process, Tata Motors would buy 27.1% from Exer, who is the investment company of the Agnelli family, and then will launch a tender offer which is similar to India's open offer mechanism to buy out the other smaller shareholder groups, when Exer Iveco is demerging its defense business, which will not be a part of Tata Motors transaction. Exer and the board of Iveco are believed to be in favor of the sales to Tata, as the Agnelli family have been an old ally of the Tata Group and its former chairman Mr. Ratan Tata, who himself was a motorhead. Tata also had an old joint venture with Agnelli family flagship Fiat Motors in India, while the Agnelli family is also prominent stakeholder in Ferrari and also controlled Stellantis, the Dutch automotive group that has taken over the Fiat brand. The Italian company Iveco is having plans to either spin off its defense business by the end of 2025 or sell it, as they have already received offers from prominent buyers. With this development, shares of Iveco surged as much as 7.4% intraday on 29th July on expectations of a transaction, when the stock has more than doubled this year, and that valuing the company at $6.15 billion. In second news, Reliance Consumer Products to acquire Baidyanath Group's premium fruit drink brand Shunya. Reliance Consumer Products is in advanced talk to buy a majority stake in Baidyanath Group's owned Nature Age Beverages premium fruit drink brand Shunya, which offers a range of zero-sugar, herb-based functional packaged drinks in flavors like Zesty Apple and Zesty Orange. Nature Age Beverages was started in 2018 by Siddhesh Sharma, a third-generation hire of the Baidyanath Group, when the group is privately held and started operations in 1917 with business interest in Ayurvedic products, pharmaceuticals, personal products, and food and beverages. With this deal, the Mukesh Ambani-owned company would seek to capitalize on surging demand for zero-sugar drinks globally, even outpacing those containing sugar, though on a smaller base. The accelerated market expansion with rising competition with Coca-Cola, PepsiCo, Dabur and Tata Consumer intensifying efforts to get a bigger footprint in the zero-sugar space with functional drinks, as sales of no-sugar and low-sugar drinks and juices had doubled in 2024, which was the highest increase in a year, though on a low base, when the growth has been driven primarily by urban Indians opting for a wider variety of drinks with a higher focus on health and wellness. The FMCG arm of Reliance Retail Ventures, which started operations in 2022, is looking to add nearly a dozen new greenfield and co-packing plants to compete with rivals like Coca-Cola, PepsiCo, Dabur and Tata Consumers, and dozens of smaller regional brands, when this acquisition moves also align with Reliance Consumer Products' plan to invest nearly 8,000 crore to expand capacity for beverages over the next 12 to 15 months and take their brands national. In third news, Mumbai-based NBFC firm LCD Investments to invest 7,500 crore in quick commerce company Zepto. LCD Investments will pick a 0.0146% stake in Zepto for its investment, which is translating to a valuation of 51,369 crore, that is around 5.9 billion US dollar. When following the transaction, LCD Investment will hold a total 0.039% share in Zepto, as in last November they invested 17.5 crore in the company through a secondary transaction. Zepto has been in the process of closing a 250 million US dollar secondary deal in which shares are being sold by private equity firm Motilal Oswal Financial Services. When this secondary sale is designed to further increase Indian ownership and clean up the company's cap table ahead of its proposed public listing, as the company aims to add another 8 to 10% of Indian shareholding through these transactions before the IPO paperwork is filed. The 4-year-old startup Zepto, which is currently working on controlling its cash burn, clocked 11,109 crore in turnover in fiscal 2025, which is up by 150% from 4,454 crore in financial year 2024, while the company's net loss had come down marginally to 1,249 crore in financial year 2024 from 1,272 crore in the previous year. After a year of rapid expansion of their dark store networks, quick commerce firms including Zepto, Blinkit and Instamart have slowed down new store additions as losses in the industry have started piling up. We The Spotlight also reported earlier that Zepto Cafe, the 10 minutes food delivery service from the quick commerce firm, has scaled down operations as it faces challenges around sourcing products and a shortage of trained staff to run its kitchens. It comes at a time when the segment is facing increased competition from Blinkit's Bistro and Swiggy's Snack, which are expanding across major cities in India. In fourth news, Indian electronics contract manufacturers partnering with global companies to get access to the US and Europe. Indian contract manufacturers of electronics goods are acquiring or partnering with companies globally to get access to their clients in the United States, Europe and other markets, trying to tap into the opportunity from the tariff turmoil that has triggered a search for alternative supply chains, when these companies are also using this opportunity to acquire new technologies and capabilities which would otherwise take years to develop in-house, even as there is uncertainty over how long India's tariff advantages will last amid intense trade talks among countries. The development aligns with the government's push for self-sufficiency in electronics manufacturing and increasing exports from India, as given the small window of opportunity, companies are taking the shortcut route of acquisitions to tap into clients looking to establish alternative supply chains beyond China. The idea is that you can sell not only what the target entity is selling, but also your own expertise and products. Companies like Dixon Technologies, Syrma SGS and Amber are actively acquiring and partnering with companies to access new technologies and tap into the global market. When consumer durables and electronics maker Amber Group is spending more than 400 crore to acquire a controlling stake in Israel-based industrial automation company Unitronics, and this acquisition is driven by the need to cater to aerospace and defense globally, which requires specific certifications. Acquiring a company that already possesses these certifications is crucial for Indian players tapping into global markets, as obtaining them independently is challenging and time-consuming. The acquisition provides the Amber Group with access to US and European clients in the defense industry, which is experiencing significant traction since the Ukraine and Gaza conflicts. While on the other side, Dixon Technologies has formed joint ventures with several Chinese component makers to acquire technology and investing over 1,000 crore in equity and capacity building. And in fifth news, Lenskart filed for IPO to raise 2,150 crore in fresh capital, and the company is targeting valuation of 70,000 crore to 75,000 crore. Omnichannel eyewear retailer Lenskart filed their draft red herring prospectus for an initial public offering, that is IPO, to raise 2,150 crore in fresh capital, where including secondary sales, the total IPO size is expected to be 7,500 to 8,000 crore, that is around 850 to 900 million US dollar, when the company is targeting a valuation of 70,000 crore to 75,000 crore, which is around 8 to 9 billion US dollar. Lenskart turned profitable in fiscal 2025 by posting a net profit of 297 crore against a net loss of 10 crore in financial year 2024, when their revenue increased by 22% to 6,625 crore from 5,428 crore in the previous year. Lenskart will use around 272 crore of fresh capital from the issue for setting up new stores in India, while 591 crore will be utilized towards meeting leasing, rental and other expenses of its existing 2,700 plus stores. The company has also earmarked an undisclosed portion of the proceeds for acquisitions. Lenskart is acquiring 80% of Spanish fashion eyewear brand Meller for 407 crore, when they had previously acquired Japanese direct-to-consumer eyewear brand Ondays in August 2022, while in 2024 the company made a minority investment in Paris-based omnichannel eyewear brand Le Petit Lunetaire, while in 2025 Lenskart made a minority in Ajna Lens, which is a Mumbai-based deep tech company and building artificial intelligence-powered XR glasses. So these were the top 5 business news from Business Bytes in our channel The Spotlight, India's first online business news channel. I would like to request you to please subscribe this channel to have all the updates from our end. Thank you very much for watching Business Bytes and signing it off.